Good morning, everybody, and welcome to Monday Morning Market Review with GoPro Trading Academy. And as always, yours truly, Ian Giffen. Right, so bit of a dead week last week. I have to say it was reasonably quiet. I've been busy working on some stuff for the boot camp and getting our trade manager tested and tweaked and what have you in advance of the boot camp coming up in 2 weeks now. So looking forward to that. And well done to everybody who's booked their slot on the boot camp. So I hope that we're going to have a little bit more action coming up in the next few weeks. I am also conscious of the fact, as I've mentioned before, that we are coming up to the Northern European holiday season, but normally it's more sort of August time that things really go dead. But in any case, after our at the moment, somewhat of a flash in the pan reaction to FOMC a week and a half ago. There's not that much on the cards at the moment, and last week was really just a bit of maintenance. Nothing really spectacular for us at all. So let's have a look at what did go down. A lot of, well, I wouldn't say a lot, but certainly overlay did give us something. So that's obviously going to be discussed in more depth at the boot camp itself, where I'm going to be explaining to you guys where we are at with the overlay and what our current sort of progress in terms of application of the concept behind what an overlay should be, where we're at with that. And hopefully you'll be able to start applying some of those principles yourself and at least testing them. But in any case, I'll talk through some of that today as well, because there's not much else to talk about. Right, so here we are, as always, starting on Euro USD, where we're still very much in a corrective wave. It is true that today we have already got a lower low for the first time since the end of that bearish impulse wave. So that is true, and that does mean that potentially we have a technical single time frame end to this phase 2 on the daily time frame. So nothing for us to look at still on a weekly, deep inside of that channel. So although it was a pretty impressive bearish wave that we had there, there's no setup or any potential at the moment for looking at daily impulse trades and so on. But this picture certainly is potentially promising for us to look at H4 impulse. So that is true. Let's keep an eye on that. Let's see what happens from here on in. Remember that the end of a phase 2 like this doesn't guarantee that we will have the beginning of the next bearish phase 1. It does obviously mean that the odds are highest that we are going to have a phase 1 wave. That's just the nature of the strategy. You know, when we based as price action traders, we understand that when you are in a trend and a retracement wave comes to an end, it is at that moment in time when we have the highest likelihood across any market conditions that the next impulse wave has started. Of course, impulse waves or phase 1 waves are where we have the highest quality price movement. Does that guarantee that it's going to happen, folks? No, it doesn't. But that doesn't matter as long as you're following your rules, because remember, if we did get a setup to short this perhaps tomorrow on, say, a daily impulse, and in fact, if you were to look at this from the point of view of dual time frame analysis, we've already had a setup here with this bearish impulse candle. But if we were to have a setup for the impulse strategy instead of a hybrid, really, then you would have to take that and manage your risk appropriately. So, in fact, a better example of this is our next currency pair, which is the cable. So here we have GBP USD, where we did, in fact, see on at close of Thursday the end of that bullish corrective wave or phase 2 wave, which indicated to us, certainly starting out Friday morning, that we were potentially in the next impulse wave. Now, obviously, things are looking a little bit different this morning, but you can't take today into account. We were obviously looking at this last week. Dropping down to the lower time frame, you know, we'll talk about the hybrid approach more in the bootcamp as well. But if you were trading this purely as an H4 impulse, then your setup candle will, I believe, have been, in fact, the last candle on Thursday. In other words, the open of Friday, you would have taken a short here on the daily impulse. So that hasn't worked out using the 3-6 rule. Obviously, this morning, you would have, in fact, been stopped out with this very annoying bullish move. But that's the way it goes. But certainly you should have and would have, if you were trading the daily impulse, looked at taking a short trade there. So I won't bother putting in the potential target down here somewhere because it didn't work out anyway. If you were looking at a hybrid approach, yes, you would have gotten a bit earlier, and you would have basically been stopped out very close to break even. Whereas, unfortunately, with the daily impulse, because you got in a bit later, the loss was a little bit bigger. But that's the point that I'm making, is that we've certainly seen the end of this bullish phase 2. Does that guarantee this is going to be a bearish phase 1? No, it doesn't. And we understand that based on the fact that this is a convex strategy, that we're going to have our fair share of losing trades. But when it does work out, obviously our winners are substantially bigger than our losers. So just to use this as an example of the kind of market conditions that can make one feel a little bit uncomfortable. But remember, that's the name of the game. At the end of the day, if you're going to be successful as a trader, it's about being consistent in the application of your rule set so that the law of large numbers can work in your favor. Right, so moving on to dollar yen, here we have seen the test of that resistance level on weekly last week again. You can see how it came up to that resistance level. What's going to happen here? Well, unfortunately, it didn't give us a breakout last week. That doesn't mean we're not going to get a breakout, but one or the other is going to happen, and we can't second guess the market. So until we do, we can't really do anything. But we are waiting for that breakout. Had we had a breakout followed by a pullback and a bullish impulse candle, that certainly would have been valid for a daily impulse. But no joy there at this point in time. Dollar Swiss, so just looking firstly on weekly, just to point out that likewise here, we are very much inside of our channel the week before last, with that very strong bullish impulse candle. This one, however, although technically we can say, we're in a phase 2 here, although I just want to double check my, yes, so I do believe we had a little wave here. So you can see that this made a slightly higher high by 0.2 pips. So technically, this is in fact a 3-wave series, which means we've had a breakdown in cyclicity, which tells us that that previous breakout that we had is in fact a false breakout at a technical level. So it's not showing the same thing on the mirror pair, which is Euro USD. But this is kind of what happens sometimes. In any event, what it did allow us to do, of course, is take an overlay, which went straight to take profits on Friday. So that kind of made up a little bit for the trades that fizzled out on us on our core strategies. USD Cad. So similarly here, we've actually seen a breakdown in cyclicity. So yes, we've had that phase 2. That phase 2 came to an end, and also now gave us another phase 2 with Friday's candle isolating that high, also giving us another overlay, which in fact we are in at the moment. So it's a bearish overlay on this one. Let's see what actually happens. I do believe we also had a setup on, was it hybrid or daily impulse? Obviously, with Friday, the start of Friday, we should have been looking for an opportunity to go long on this on H4 impulse. And as you can see, that didn't work out either, wherever you might have taken that. So this is another one of those trades that really just fizzled out. And yeah, that's what the overlay is for, is to try and help compensate for that. Aussie USD, as of Friday, the end of the week, still very much in the retracement wave. But as you can see today, we had a lower open. So, unless this goes higher than Friday's high, which would make today's low non-relevant, we may well be seeing the end of this wave as well. So another one to look out for. It's still very much an intact bearish trend, albeit the fact that we are in a phase 2. Same thing on Kiwi, almost exactly the same picture, basically. So keep an eye on those. A good example of, again, where you just got to be careful of not overextending yourself. These are all, those were all the instruments that have got the US dollar in them. So you need to be careful that you don't overexpose yourself to USD. And of course, it's the US dollar that drove that price action. So remember that we don't want to overdo that. Okay, so moving on to our yen crosses. Similar picture across the yen crosses, obviously, because the Japanese yen often react in tandem with the US dollar. So here we are on the euro yen, came back a lot deeper last week, came straight back up to the old, or our channel boundary, so very much outside of the channel. We had a couple of inside candles on Thursday and Friday, really scrappy, dead market behavior. So, you know, if you were looking at trading that, then certainly if you are using the inside bar as your conditions being met for this, which is valid and part of the sort of slightly more aggressive approach. Let's just make sure we're looking at the right day here. So it would have been only really on Friday that you would have looked at that with the inside bar. On Thursday, there was a setup with the bearish impulse candle here. So if you'd taken that trade, that would have been your stop, nice and tight, as you can see, and you would still be in that. Let's just have a look again at circle at 70 odd pips ATR. I thought I'd done this already on the weekend, but in any case, have a look. Something like that, just with that standard targeting, obviously. With Friday kind of just eventually moving a little bit lower to the close, which is reasonably okay. 1, 2, 3, 4, 5, 6. So you already be trailing your stop, or have trailed your stop slightly on this one, as you know very well, using the 3-6 rule to look something like that. And actually, this is 3 lower closes, so further possibility to trail. So yeah, your open risk should look something like that. So you've trailed your stop to that point already. So yeah, we don't know what's going to happen with it, but there you go. That was definitely another valid H4 impulse, with us bearing in mind as well, just looking at the weekly time frame, that we are still outside of the channel. So just confirm we had that close 74.6 and the high here 68. So we did have the outside close here. So bearing in mind that this continues to be an outside C close, this bearish wave is not yet over. Just remember that. All right. So if you're trading the daily impulse, then bear in mind that the philosophy behind the criteria, the selection criteria, is that we need to have reason to believe that not only are we in a trend, that we are in the next impulse wave of that trend. So if you were using multi-time frame analysis on this, you'd be also looking at the cyclicity here, which means you'd be looking for a breakdown in the bearish cyclicity, which would potentially signify a resumption of bullish cyclicity. So we haven't yet had that, but if we do get a bullish impulse candle here, those of you who are looking at more sort of hybrid approach would be looking to take that as an early trade anyway. So just bear in mind this picture in the context of what we're looking at here on weekly. So that V-shaped recovery on the daily is obviously these 2 weekly candles, one after the other. Does that mean that this bearish corrective wave is definitely over? Well, no, it's actually not over at the moment in any assessment. So if you're using multi-time frame or single time frame analysis, in both respects, it's still intact. But it's looking pretty likely that this bearish cyclicity on daily is much more likely to come to an end first, which could potentially give us a setup to go long if you're trading more sort of hybrid. Otherwise, you need to wait until potentially the end of this week. If we do get a breakdown cyclicity of this bearish trend on daily, and a resumption of bullish cyclicity, that would indicate that we potentially get a higher high, ringing that low here for this current or last week's candle, which means that next week we could start looking to trade daily impulse again. So hopefully you can see how you can kind of see these things coming from somewhere off. All right, so a similar picture on GBP Yen, except that here clearly we have had that close inside. So any C close here, well, when this becomes the C close, it's still D at the moment, or D close, but when it becomes C close, it can't be an outside C close. It's already an inside C close. So yeah, nothing much for us to really do there. Also here, we had such a deep retracement that it came right back inside of our 4-wave channel. So this is not on the table for us for H4 impulse either. Similar picture on Swiss Yen, also came back inside of that channel. It's just the way that the channels have worked out, and kind of also helps us to manage our risk. So it's not a bad thing. You don't want to be in all of these trades deep inside of the channel on weekly. So not really looking at that at the moment. Cad Yen similarly back inside of the channel. So you can see that there was just a few that have shown sufficient respect of resistance to stay outside of those channels. The majority of these yen crosses have come back inside. Same thing here on Aussie Yen, even though it's opened outside again today. I mean, if you're not requiring an outside C close, I mean, if today's candle were to close like kind of where it is or any lower, closing outside of that channel, and if you're not requiring outside C close, then these would also be set up potentially to go short on H4. So, but on daily impulse, nothing, because we are very much inside of the channel there. Right. So same thing on Kiwi. It's almost a carbon copy. The difference here is it's even encroaching on that previous wave, so it's a little bit weaker even than Aussie Yen. Right, so Euro crosses next. Euro GBP, pretty much a nothing burger for us, apart from the fact that we got a nice overlay hitting take profits straight away on Friday. So helped to compensate for some of the other stuff that we had. Euro Swiss, nothing. And you guys who are going to be interested in the trade manager, I don't even allow you to trade Euro Swiss, I'm afraid. So what's happening here? There we go. All right, so Euro Cad, likewise, we also had on this one an overlay which is currently still running. So yeah, nothing much really for us to do here at all, deep inside the channel. I'll also be talking to you guys about the overlay in terms of using it purely as a counter trend strategy, which is really what it should, as opposed to also using it as a ranging strategy. Right, so here I think we spoke about the overlay. That's where 1, 2, 3, 4, 5. Yeah, so the week before we had a successful overlay. This would also, okay, this was not a setup for an overlay to short because we had that close outside with the market coming straight back inside again. I think we spoke about this last week, Monday, where we did get a close outside, but it opened back inside the channel and never went out again. As you can see, Monday and Tuesday, it tested that resistance level before rolling over and coming back inside of the channel. So yeah, nothing there at all. And Euro New Zealand dollar, similar picture, slightly more extreme, but same thing. Outside close, Monday just came straight back inside of the channel, and everything else since then has just been a follow-on from that. Right, so that's the Euro crosses. Moving on to pound crosses. So GBP Swiss, we did get that breakout. So let's have a look at this one, another one which disappointed, of course. So H4 impulse setup, following our rules, especially our pullback rules. We actually had a inside candle after an engulfing candle, and then we had our impulse. So this was actually a setup. Trailed the stop to just over half the original risk before we got stopped out. So yeah, another one of those really scrappy week last week, as you can see. As far as that's concerned, GBP Cad, I think we had one. Yes, we did have one H4 impulse win. I just need to make sure I don't miss that. Okay, so yeah, I think we spoke about this one already the previous week because that breakout occurred on the 17th. Yeah, so we would have already spoken about that. And therefore, any potential setup post that, well, if in any case, even if we didn't talk about it, there was a setup which also didn't work out here. So trailed the stop somewhat, but very scrappy price action. We've spoken about the quality of phase one waves. This is a good example of low quality. Why do I say that? Well, we had the breakout, but how many impulse candles did we get? Well, apart from the last one, that very last candle, none of these candles in this impulse wave were in fact, and I might actually have that analysis. No, it's not. That's correct. So that's a non-relevant isolated low. Apart from that very last candle, the last gasp, none of them were impulse candles. So there's a bit of well, quite a good example of a poor quality phase one wave just by looking at the candle closes. All right, so GBP Aussie, likewise, what did we do here? So last week, 1, 2, 3, 4, 5. That was Monday last week. So we did have a breakout. Remember, our channel boundary at that point in time was down here. So we did get that extra wave in there. Just want to remind myself what happened. I don't think we got any, I don't think we took any setups here at all. And just wanting to see if that is correct. Yeah, so the breakout obviously was with this bullish candle. I guess the reason for that is because at the end of this day, where we had an outside close for the first time, it also ringed that high. So we were technically in a phase two wave and would not have touched that. Yeah, that certainly makes sense. So the first outside close we had, just remember that this is the channel boundary here, was this candle. But at the end of that day, it had ringed that high with a lower low, and we were therefore in a phase two wave. Then we did get the overlay. This is a counter trend overlay, which worked out perfectly. Take profit, so that worked out quite well. Similar picture on GBP Nzd. Just checking here. Yeah, okay. So I'll just go back and have a look at GBP Aussie again. But on weekly here, we did have a breakout candle a week before. We would have spoken about that. Last week, it just rolled straight over and came back inside. Now, remember, with that breakout, you would have been saying we've got a potential trend and therefore we'll be looking for daily impulse. But in order to take that, you would need to have a bullish impulse candle, and we had nothing of the sort. So there was no trade on the, because of the lower time frame execution criteria, also the lower time frame selection criteria to execute. But what we did have is, likewise, we had a kind of a double top rolled over and a very nice overlay. So that went straight on to take profits. Doesn't look quite right. But anyway, it was a nice winner. So perfectly happy with that on GBP Nzd. Let's just quickly go back to GBP Aussie. Let's double check weekly time frame. So similar picture. We got that higher high last week and then it rolled over. But remember, we were looking also here for a bullish impulse candle to go long. And 1, 2, 3, 4, 5. None of these 5 candles gave us that bullish. In fact, not 5 candles. Going even back to the preceding Friday, that is not an impulse candle. That is not an impulse candle, and of course, none of those are impulse candles either. So it kept us out of a daily impulse, which kind of is a bit of a pity because before that bearish candle, this is a nice picture. Okay, it's a really nice picture. If you close your eye to that, and I'm sure I've mentioned this last week, it's kind of picture perfect, but it also just goes to show that even when the picture is perfect, it doesn't mean that it's going to work out. So never get married to your hand. No matter how nice the setup is, no matter how perfect the setup is, no matter how much the same it looks like the previous one that worked out perfectly, it doesn't mean it's going to work out this time either. So although there wasn't actually a final setup for a daily impulse here, this is the kind of thing that some people might allow themselves to get roped into just because the picture is so perfect and want to jump into a trade just because they should have got that entry criteria and they didn't, and they take the trade anyway. So if all your criteria are not met, you don't take it. Yeah, that's pretty much it. We didn't even have an opportunity to look at a hybrid yet, I believe. Okay, so moving on past our Gbp Crosses. So Cad Swiss here on daily. As you can see, nothing in terms of our channel. If you were using overlay as a ranging strategy, there was a setup here which in fact allowed us to take profit on that, I think, on Friday. I haven't updated all the analysis on these things, but we'll talk about that in more detail when we get to it in the recap. All right, so Cad Swiss on weekly, likewise, absolutely nothing for us to look at. Aussie Swiss, yeah, so you can see how we had this retest of the support level. I'm pretty sure we spoke about that because this is 1, 2, 3, 4, 5. Okay, so last week, Monday, you could see how we tested it, bounced off. Tuesday, it retested it, bounced off. In any case, we did have an overlay here as well, which also hit take profit as a counter trend overlay. But apart from that, nothing doing. We've still got a reasonably wide channel. You can see the upcoming 4-wave channel boundary resistance level here. So as soon as this wave is over, which it isn't yet, because today made another higher high. As soon as this wave is over and it rolls over, this is going to be our 4-wave channel boundary. So clearly we can see that is a potential resistance level coming up and also is visible in terms of where we found support in the past as well. In any case, really, apart from that overlay, there's nothing for us to look at. Here on the weekly, you can see how, we looked at this before. So 086 and our close was 059. I mean, we had this outside close here. It was marginal, but it was an outside close. And then last week, we've got this bullish impulse engulfing candle. So it really made nothing of that. But remember, because we had that last week, we were potentially looking to short this with a daily impulse starting with, I think, that. So you may well have taken a bearish daily impulse here on Monday morning. And of course, that just did not work out. So it continued to find support in that area. This is really where the counter trend overlay shows its strength, because although you would have had a full loss on that short there, you would have made the majority of it back with the bullish overlay. It doesn't always work out that way, but this is an example of where it did. So, and quite frankly, I'm particularly favoring the overlay purely as a counter trend rather than as a ranging type strategy. Okay, so Aussie Cad on daily, deep inside our channel, but this is where it gets quite messy. The picture, obviously, last week Monday was with this bearish engulfing impulse candle. So we were looking to short this as well on a daily impulse. If you had just taken the daily impulse, and we're waiting for that, I think where are we? So 1, 2, 3, 4, 5. I think you would have had to have waited for this one here. If you were trading it as the hybrid, you would have gotten somewhat earlier. In any event, I think we've managed to survive it so far. I just want to double check here. Yeah, so you can see how the stop has been trailed, and it has survived so far just. I mean, Friday came very close to stopping us out, but so far it has survived. But will it continue to survive? Well, we don't actually know. So for those people who are trading a ranging overlay, you would have also had a setup to go short here, and you would have made about 0.4 of a risk unit. So nothing to write home about. But in any case, that's not in terms of the counter trend. But yeah, this is certainly has been a valid market for us to look at shorting in terms of the daily impulse, if you are happy to take the trades that are still within the channel on the daily time frame. Been some discussion around that as well in the academy, in the strategy center. All right, so Aussie Nzd, we've on daily still, as you can see, just kept rolling back inside of this border channel. So we had a small win on an overlay there as well. You know, weekly is still very deep inside of the channel, so really not interested in anything daily. Well, in fact, not interested in anything here at all. So you can ignore that completely. Kiwi Swiss. So just also pointing out that on weekly, we're still very much inside of the channel, but on daily, we had a retest of that support level. Another opportunity for an overlay, which went straight to the take profit. So that was another nice one. Counter trend overlay here as well, obviously. So yeah, nothing wrong with that. But you can see how that bearish breakout that we were looking at potentially trading last week came to nothing. If you were looking to trade this on Monday, obviously with an H4 impulse, just to have a look at that, make sure I cover all of those bases. Doesn't look like we actually got any setup. So this would have been the start of Monday. There was the overlay. And of course, by the time Tuesday came along, it had invalidated itself. So the lower time frame criteria for a bearish impulse candle weren't actually met here at all. So you would have been potentially looking at that if you were not requiring an outside C close, because obviously this is an inside C close. Right, last but not least is the Kiwi Cad, where we've also had an overlay, which gave us a little winner. On weekly now, you can see how last week's candle has ringed this low. We have not had a close below that support level. So this bearish trend that we have had is now over, phase two, phase two. So that's dead in the water. You can't look to trade this in a bearish direction with daily impulse any longer. And you can see how that support level over here continued to be respected all the way through last week. And as I say, that did give us an opportunity to get a small win on a counter trend overlay. Right, so guys, that's pretty much it from me. It's not been there's not a lot of action at the moment. This is still a quiet time after a little bit of a burst of activity the latter part of the previous week. We just pretty much sitting still, biding our time, following our rules. I don't think we actually really made any money last week. We made some, we lost some, we lost some, we made some. So it's just one of those times where it's important to ensure that you are not losing money by chasing after stuff that's just not there. It is always a tendency that we need to fight against. We are human beings, and our natural tendency is to feel like unless we are doing something, we can't we can't achieve our goals. So you have a clear goal in your mind, and that's the reason why you are a trader or you're looking to learn how to trade. And there is this very strong instinct to feel like we must be actively doing something, otherwise we are not moving towards that goal. And when it comes to trading, that's not actually true, because standing still is a very good thing if the only alternative is moving backwards. So much of trading, a lot of trading, especially when you're trading convex strategies, is all about holding your position when that is called for. It's certainly better to do that than to go backwards, especially when it's unnecessary. There's plenty of times where when market conditions are even worse. I mean, at the moment, the market conditions are not great at all, but you should be able to hold your own. There are enough times in trading where conditions are really bad and they really suck, where you have false breakout after false breakout after false breakout, and it becomes very difficult to hold your own. Those do also happen. So it's really important that you don't add to that. And so much of trading is about making sure that you don't lose money unnecessarily. Capital protection always comes first. So if you keep that in mind, that drives everything, because of course that is our third pillar: limit downside, maximize upside, and in fact is the conceptual foundation for convexity. And I'm here to teach you guys how to dominate over an environment that is fundamentally uncertain. If you continue to believe that it's possible to know anything meaningful in the future, then unfortunately you're doomed to fail. So that's what this is all about. Don't expect to always see highly active winning trades from people who are professional traders, because that's just not the way it goes. Right, folks. So I don't see any questions. Has anybody got any questions for me before we sign off? And of course, if you're watching the recording, you're welcome to pop your questions into the comments below this.